whenever you're ready.
All right, I always love enjoying the Little Eagles with the Real Estate Radio Network's Don and Gino show. And we want to share some more information with our guests here on your hometown station, AM 1220 KHTS, with Bill Freidman with Friedman, Thompson and Company, CPA tax expert, sharing gems of knowledge with you. Also have Steve Korn, owner of Newhall Escrow, one of our co-hosts, join us again. And, of course, Gino Fronti, my partner and co-host. And we want to talk more about tax advantages and more good news from our tax specialists. But we didn't want to leave the last few topics we were talking about regarding interest deductions. There was a couple things we left out.
Oh, on the foreclosures.
Yeah.
The important information is to know that there is an exclusion from income from the capital gain, from the cancellation of debt, and it's part of the Mortgage Forgiveness Debt Relief Act of 2007. And this is going to expire at the end of 2012, so January 1st, 2013 is going to be too late. And so a lot of this exclusion from cancellation of debt income is going to go away. So if you're thinking about going through a short sale or foreclosure, now is the time to do it. Foreclosures are going to be much more difficult because you're out of control. The banks sometimes are not foreclosing until sometimes you don't make a mortgage payment for 16, 18 months. If you decide to go the foreclosure route, you may be out of luck because by the time they foreclose and you get that cancellation of debt income, it's going to be too late. So a short sale gives you a lot more power on your side, and you can control when the transaction goes down. And as long as you go through the short sale before the year 2013, this exclusion is still in place. And it's not for everybody. It has to be qualified debt. It has to be debt that you use to purchase the home. Just a real quick instance of when it's not qualified is when you pull money out and used it for personal purposes. There are some other hurdles you can go through. Even if you do have this other type of debt that doesn't qualify for that exclusion, there's other exclusions like bankruptcy and insolvency, which allows you to exclude that income.
It also allows you to get back to the mortgage market faster.
Exactly.
For sure, which is a key in this
short
strategy.
sale versus a
Yeah, because the strategy right now is, well, the rates are down, the values are down, you want to get back to the real estate market sooner than later so you can take advantage of an opportunity to buy.
Correct.
Well, we've had numerous conversations regarding that topic, and this is just one more advantage to why use a short sale as a tool rather than a foreclosure as a negative, as a negative
thing. If you know you need to make the decision, then the short sale will most likely be the best route to take.
And morally, it has some good advantages too. You actually work with the bank instead of walking away and saying, "Here it is," and you deal with it.
Right.
Deal with my problem now.
And like I mentioned, just a little bit ago, it's not your fault. It's not that you're choosing to do this. Maybe it's the economy or the values have chosen it for you,
Exactly.
and you need to take action as opposed to just hoping, sitting there hoping, and not taking action is basically making a decision. You're making a decision not to take action, which can be a very poor decision.
There's a reason the government's giving this as exclusion from income.
Yeah,
they wouldn't give it to us
absolutely.
if they thought it was the wrong thing to do.
Well, that's
right.
a good point.
That's
point.
a very good point.
Yeah.
One of the things I wanted to kind of quantify that, there's many people that I know that are, let's just, for argument's sake, say $300,000 upside down on their home. It's not an outrageous number. It is a real number that we see in Santa Clarita. And what I wanted to point out is that it might take approximately, if you do a short sale, approximately 3 years to get back into the marketplace. So technically speaking, in one way of looking at it, you could possibly save $300,000 in a 3-year span. That's like giving yourself a $100,000 a year raise.
That's correct.
Yeah, I mean, that's
I'll
give
take
yourself a raise with a short sale. I love it.
There you go. I like that. I like that.
We wanted to get on
And not pay taxes on it.
Yeah, no doubt about it. That's a key. Capital gains. That's something we're going to talk about.
Absolutely. We didn't want to miss that subject because it's key.
Sure.
And I know Bill Freidman with Friedman, Thompson and Company, CPA, your local CPA and tax experts here to help. And he's going to give us some more gems on and good information. See, you're the good guy. You're the good news guy today.
Glad to be the good news guy finally. Most people
For once in your life.
most people compare me to the dentist during tax time, but I like to be able to be the good guy once in a while. And capital gains exclusion on the sale of your principal residence is one of those areas of the tax code that is really good news for taxpayers. And a lot of people don't know this, but as long as you've owned and lived in your home for 2 years, you can exclude the gain on the sale of your home for up to $500,000 if you're married, $250,000 if you're single. I have clients that are in the construction business, and you don't need to be in the construction business. If you're handy enough, you can buy fixer-uppers, move into them, live in them for 2 years, add rooms, increase the value up to $500,000 more than you paid for it, sell it, and pay no taxes. That's tax-free living.
And do it. You can do this again every 2 years if you want.
Every 2 years you can do this. If you've got the skills to do that, I don't know why you wouldn't, other than the fact you have to move every 2 years.
Right. I bet you didn't know that. I bet you. I mean, a lot of people don't know the 2-year exclusion. That's a key point. I mean, that's tax-free money up to $500,000. You kidding me?
Yeah, I'm walking away with a lot of tax-free bucks here. I don't have room in my pockets for all the stuff that Bill gave us today.
There's another strategy too. That a lot of people are moving down, up, and sideways in this market, especially older folks. Moving down or sizing down, and when they sell their home they've been in for 50 years, they paid $40,000 for it, and they're selling it for $600,000. There's issues, issues of as far as what their tax liability is, how much money they should reserve to pay for medical expenses going ahead in their life, in the rest of their life. What kind of living, form of living, or let's say quality of living do they want to have, and then how much home they can afford. Bill, what's your best advice to somebody like that in that situation?
Well, taking advantage of the capital gains exclusion does help out a lot in that area. The scenario you just mentioned is an actual example of a time where there would be some tax on the sale of that home because the gain is higher than $500,000. But that gain is limited to the long-term capital gains rate, which is at its lowest all-time right now. And in some instances, it's tax-free if you don't earn any other income. But for most people, they pay 15% on long-term capital gains, and if you include anywhere from 1 to 9% state tax, depending on what tax bracket you're in, you're still paying under 25% tax on the additional gain over the $500,000. So it's a good time for people to actually sell their homes that they lived in for years and buy down, pocket cash, make that money work for you for your retirement purposes.
It's obvious to say, though, that they could not make those decisions on their own. They need the professional advice of somebody like you to make that sound decision, right?
I believe so.
Yeah.
Well, I love that.
Some people find that advice themselves probably, but
they try.
We're here to help.
They try, and I can't believe they do. So you got to get a hold of Bill Freidman to make that decision.
Yeah, I think it's a lot probably safer than Google Tax. If you could buy a program for $60, I don't think
It's the best advice on the planet,
exactly.
right? Yeah,
Good point. Good
probably
point.
just okay.
Well, and that's what I love about Bill is that he's just a real guy. I mean, you offer a lot of great tax advice. I mean, even if you go to the institutions that save you money supposedly by stacking your paperwork for you, basically as far as I'm concerned, that's what they're doing. Well, you actually give sound advice, and it can be annually. I mean, people come up with, important decisions for their families on what they should or shouldn't be doing, and it's comforting. And the amount of money that can be saved by getting sound advice is you can't even put a price on it. I mean, don't you agree? I mean, you're so good about always giving advice to your clients that, like you said earlier, that become friends of yours.
I agree, and many of my clients meet with me on a monthly basis to get tax sound advice, or sound tax advice, I'm sorry. But part of my motto is I won't charge you if I'm going to charge you more than the savings I'm going to give you for the advice I give you.
Wow,
So-
that was big. See, I heard that. That he was saying that he's not going to charge you more than what he saves you. I love that.
How many people can say they
I
can do
lose a lot of
that?
clients if I charge them more than they're going to save in taxes from our meeting. So
So profit with Bill Freidman.